He's joining me now to discuss TD Cowen senior retail analyst Oliver Chen. Oliver, it's great to have you here. And this is an interesting one because this stock had been on fire for a long time. It's sold in a number of retailers, and a number of retailers are having to go through some price adjustments. So can you explain to those that may not understand the particulars how that really did have an impact on the quarter?
Yeah, basically, Courtney, Elf is raising the cost of their product by about $1. There was a slight disruption in terms of retailers taking a little more time to raise the price, and the company stopped deliveries to those retailers until they did raise the price. So that was an issue in terms of core ELF brand growth. And that is overall an issue too, as core ELF brand is growing around 2 to 5% in the second half. This is a brand, Courtney, that grew around 20% previously. So it's a very good company, and we are recommending the stock on a long-term basis, but expectations were high, and we thought expectations were high coming into this quarter, and growth has decelerated.
And so even though they're going to have to take these price increases, you don't believe that it's going to deter demand for this product. Obviously, this is a lower price product than some other makeup brands out there. This is more mass, less prestige.
Yeah, we see consumption trends as being quite attractive in terms of 7 to 10% in the market, but retailers are destocking and they're facing tough comparisons. So the reality of ELF core brand growth is moderating relative to the past, but it's still growing, and it's a very innovative company that reacts with speed. The stock is down a lot because expectations were very high, and this had grown a lot faster in the past. But the backdrop remains pretty good for beauty in the long term, given that it's a resilient industry.
Love to move on to Tapestry. Again, not everyone knows the parent company name, but they know the brands within. Certainly, Coach, Kate Spade. I mean, Coach really is seeming to be quite on fire with the younger customer, that Gen Z customer. What do you see here? What do you make then, of course, of the stock reaction and potential opportunity?
Yeah, Courtney, we're recommending Tapestry, and the numbers were great at Coach, growing at 21%. What they're doing well here is capturing Generation Z customer. They're also offering a really good value. We cover luxury like Louis Vuitton and Cartier, and those handbags are $2,000 to $3,000 plus. The Coach bag's around $300 to $500, and it's globally working in conjunction with great product, as well as a very good store experience and Gen Z relevant products. So the business is hitting on many cylinders. Kate Spade is still a work in progress. That's something we're watching. But overall, it was great results. Again, this one was a case of very high expectations coming into the quarter. Otherwise, the print was solid and margins were very good too.
Yeah, I think that's really interesting, obviously, to know the context, because if you just look at the stock reaction, you may think that these quarters that were put up were not impressive. And it sounds like by your read, you feel like things look pretty good. I'd love to broaden this out just a little bit to talk about the state of the consumer, as we're sitting at a really interesting point. We're in the beginning of November. We're still in a government shutdown. We're starting potentially to see some cracks in the labor market or some worries. And this continual consumer bifurcation where the lower income seems even more stretched, the higher income seems even more protected. How do you think all of this is going to play out as we move into holiday?
Yeah, Courtney, that continues to be a big theme in terms of the higher income spenders being more and more important to companies. What that really means for holiday is you don't want to be stuck in the middle. So unfortunately, department stores and others that have a middle income positioning are in a much tougher place. What we really like here is Costco. We like Revolve. We like Tapestry. They're pretty unique stories. We like the digital story and the AI story at Walmart, but of course, we're watching the government shutdowns as well. And AI is a big hot topic too. Overall, though, you really shouldn't bet against the U.S. consumer. The U.S. consumer has been resilient. Unemployment is low. Consumer confidence and the volatility we're seeing there is something to watch. Consumers will always look for value, and value more than anything else is so important. So retailers executing to low price points, planning for low price points, planning promotions, that will be important too.
And before we let you go, I'd be remiss if I didn't get your take on Canada Goose. Are you still sitting at a buy?
Yeah, we have a buy rating, and we like what's happening here. What happened was we had mismodeled the marketing expense, and marketing expense came out higher than the Wall Street expected. However, the product story, direct-to-consumer comps are up 10%, a new creative director, and a lot of the non-parka product and global attractiveness, it's working. That being said, the EBIT was lower than we expected on the SG&A line.